Hello, and welcome to the Venue Coach Blueprint for Owners. I'm Kyle Labar. This podcast is all about helping you fill your wedding venue with more bookings, earn more from each one, and keep your customers happy for a long time. We'll also talk about some tough times and big lessons that I've learned along the way. Let's dive in together and make your venue the best spot for weddings. Hey everybody, welcome to another episode of the Venue Coach. Today's episode, I'm going to be talking about how we can increase the profitability of our venue without having to add more bookings to the calendar. This episode won't be applicable to everyone because it's situational dependent, but if you're in this situation, I hope this helps you out, or at least gives you a good point to start on. So what I'm talking about is not a way to increase profitability by on the income side. So it's not getting more tours, it's not increasing rates, it's not adding upsells or anything like that, or vendor referrals, or all of those different things. Those are all great, and you should absolutely be doing those. The other side that we want to look at is on the debt side. So if you're like me, you bought your venue with the help of a lender, and you have debt to repay. So this is where we'll dive in. Many wedding venues cost millions of dollars, and those loans, especially if you're doing an SBA loan, in our situation, I'll just tell it from our perspective. So in our situation, we got our SBA loan. Most SBA lenders are variable, which sucks when the economy is just getting out of COVID. All the rates were super low, and because of all of that, rates start going up. So we got caught in that, and that is not super or duper. So what we're working on is getting our loan refied into either a 504 SBA loan or a conventional commercial loan. So if you're brand new and you're getting into this and you have to go the SBA route, I mean, the business works as long as your models and your projections all make sense, then it still works. Like, we're still able to be profitable with our current SBA loan, but this is where it makes a lot of sense. So currently, our SBA loan is at a really high percentage, and we're trying to bring it down. It's going to come out to be about 4.5 points lower. And when you're dealing with multi-million dollar loans, that 4.5%, I mean, it's a big deal regardless. But when it's multi-millions, it really has a huge impact. So let's just say, for example, you had a loan for $2 million and it was at 11% interest. You have 25 years, you'll be paying $19,600 a month on that loan. Now, let's bring that down by 4.5 points. Did I say 4.5? 3.5. Sorry, I misspoke. So 3.5 points. So let's bring that down by 3.5 points. So that's 8.5, and it would lower your cost from $19,600 a month down to $16,100 a month. So you're going to wind up saving $3,500 a month. Now, for some venues, that might be the equivalent of one more booking. For some, that might be half, or it could be 10% or 25% of a booking. It just depends on you, but that is a significant difference when you're able to bring that percentage down. And actually, I think I was right, 4.5%. So let me update that. So instead of 16.1, it would be 11. No, now I'm getting crazy with the math. It would be 14.8. So 14.8 versus the 19.6 of the original at 11% on a $2 million loan. So you go from 19.6 down to 14.8, which is $4,800 difference. So that's one whole booking for many of you. And that makes such a huge difference. Imagine being able to free up almost $5,000 a month. That's an extra $60,000 in top line for your business that you are freeing up. So you've just become $60,000 more profitable without having to do more marketing or get more sales or um, get reach out to anybody for referrals. Or yeah, obviously all those things need to keep happening, but what happens when your calendar is already full and you can't add more, you can't get more? So how do you grow besides raising your rates? That's the other way, is reevaluate your debt, restructure your debt, and make sure that you are optimizing that so that you can put more money back into your pocket instead of paying the banks crazy percentage rates like I am. So that really, that's what I would recommend. Now, in terms of who to look for, that sort of thing, I don't really recommend, or I don't have a recommendation just because I'm not affiliated with anybody or anything like that. But I would say that if you're brand new and you're looking at an SBA, try to get the 504 because those are actually fixed rates. That was something we didn't really know or wasn't presented well to us before. Or if you can get a commercial loan, and those are fixed rates as well, typically lower than the SBA route, and you avoid the variability. The one thing of note is that the note is due within 10 years, but you have a payment structure that goes out like as if you were out 25 years. And so you'll just have to restructure or pay back the entire loan within 10 years. So that's the one caveat there. But I hope this was helpful for any of you. If you haven't really thought about it, you're just paying your mortgage. The rates are anticipated to come down soon. And if you're on that SBA and you're having the same misery as me of paying almost 11% in interest, start looking, get that refied, get it down, and you will save a significant amount of money every month and every year. And think about what you can do with that to grow your business, to hire staff, to do upgrades, to do much needed maintenance and repair, you name it. Or just put it in your pocket and go have a vacation with your family because you've been working every single weekend. Like, you can't do that if you don't make the adjustments. So as long as you have strong numbers and your business is healthy, then they will be very interested, especially after 2 years of operation. So yeah, I hope this was helpful for you. If it was, please subscribe. Stay tuned for the next one, and I will see you there.